Okay, well, let's go ahead and get started. I know people are still filing in, and apologies everybody for the late start. Thanks for bearing with us. So, welcome everybody to our first Blockchain and Crypto Mining Association webinar. My name is JP Latour. I'm the Southwest Director at BCMA. If you're not familiar with us, we're the world's largest nonprofit association for crypto miners. And I've got here with me my co-host Matt Tunney, who's also a board member and officer at BCMA. Say hi, Matt.
Hi, everyone. Hi, Alex.
Hi, morning.
So everybody, we have a very special guest. We're here with Alex Mashinsky, CEO of Celsius Network. Alex, welcome.
Good morning. Thanks for having us.
Okay, so we're going to kick things off. At the end, our plan is to save some time for questions from the audience. So feel free to ask your questions in the chat by clicking the Q&A button at the bottom, and we'll try to get to those towards the end. So Alex, you were saying you were just at CES in Vegas. How was the show? Why did you attend?
So this is the first time CES had a separate track for digital money. And they had, I got to do a keynote, and we had a booth on the floor, and they had a pretty good session, probably about 300 people who came to learn about the blockchain, learn about cryptocurrencies. And, you know, I kind of polled the crowd. About a third of them were already coin holders, and about 2/3 were newbies, which is great. That's exactly what we want, educate and bring new people to the community. And, you know, I was, Tim Draper was there were a bunch of other people. So we did a pretty good job, I think, cheering up the crowd and convincing them to hodl. You know, I think we have plenty of new converts. So I think we did a good job I think CS is a great venue to kind of bring people that don't know anything about the crypto community. They might be world experts at computer technology or networking technology, but they really, a lot of them had very basic questions. Like, it's funny, I had a slide about one of my first slides was, what is the blockchain? And then I showed a picture of a tank. And people were like, what? What does that have to do with the blockchain? And I said, look, it's slow, it's expensive, and it's only good for one thing, you know. And but you better stay out of the way. Don't you know? You don't want to front the tank, and so it's safe, it's secure, and it's very powerful. So, and I think they kind of delivered the message. The whole point was to really educate people about what's the opportunity, why this is a long play, and why now is a good time to buy some coins.
Awesome. On a side note, I saw another interview with you and Tim Draper at a different conference, and I guess you guys have a bit of a history.
Yeah, so it's funny. I did 7 startups in my career, and I pitched him on 4 of them, and he said no 4 times. So every time we're on a panel together, or he opens for me about a bunch of, I'm kidding, I'm saying I always go after him because he's the big celebrity. But you know, he always gets up there and he says, you know, I missed 4 of Alex's companies, you know, like only 3 billion in exits, so nothing serious, you know. So, and I keep asking them, so why you keep saying no? He's like, I'm always coming when it's too late, you know. I'm like, it's not too late for Celsius, you know. So but anyway, yes, you know, he loves being the angel or the A-round, you know. So usually by the time he finds out about my next big thing, it's too late for him.
Yeah, you guys are more of in a growth stage at that point. So for those people who may not be familiar with Celsius Network, can you kind of just briefly explain what it is?
Sure. So we are really a very, just like you're a nonprofit organization that's kind of trying to help the miners. We do the same thing for the hodlers. So we have, it's a community in which our job is to pull together all the coin holders and extract the most value for the coins that they have from the other side, in which case these are mostly hedge funds and exchanges that want to borrow the coins, hedge the coins, and so on. And today, most people don't know it, but when you deposit your coins in exchanges, or when you The exchanges make a lot of money from it, right? Binance announced they're going to make $1 billion in 2018. Most of that comes from rehypothecating your coins. And they don't send you a dividend check at the end of the year and saying, thanks for giving us your coins for free. We've made the bundle on them. Here is half of it, So Celsius basically charges the hedge funds the same fees that the exchanges charge, but we give 80% of that back to the community. So every Monday, we have a distribution that includes what we earned the week before. And all of that is registered on the blockchain, so it's auditable to anybody. And we have 15,000 registered users from all over the world, over 100 countries. And we've launched in June. We've done over $780 million worth of lending, coin lending.
Wow.
That puts us, that's more than all the other guys put together. And what we do is really pull a lot of these coins off exchanges and make people pay for them instead of getting them for free. So if you're holding it in cold storage, you're not earning anything. And if you're holding it on exchanges, you're really letting them earn, not just earn on your behalf, but also they're the guys who are enabling the shorting, right? All of these drops that you see, that's just hedge funds and large players piling up with the shorts. And we want to increase how much they pay. I want to charge these guys 20% per year, not 8 or 9%. So if we all huddle together, we can charge. It's great if they want to short. Great, pay us 20% for that. So that's really the strategy: is to really take the power away from exchanges and give it back to the coin holders. So that's our main service. We also provide loans, dollar loans. So if you have coins, you don't want to sell them, or you don't want to pay taxes, because when the minute you sell your coins, you have to pay tax on that. You can borrow against your coins, just like you can borrow against your Facebook or Google stock. And we only charge 5 to 9%. So that's half of or a third of what Salt or BlockFi or Nexo charges. And on top of that, all the interest we collect, we buy coins with it and distribute them. 80% of that goes back to the community, versus if you look at Nexo, for example, all the interest they collect is distributed as dollar dividends to their shareholders, and they only have like 5 shareholders. So really, they're not helping the community. They're sucking money out of the community. We're putting money back into coins, right? So I think the Celsius mission is in the best interest of the coin holders. And that's what we're doing every day. We're basically like a Costco, right? You buy membership, and then you go into warehouse and you get the toilet paper and the orange juice at the rock bottom prices. And here we curated the best financial services that are in the best interest of the community.
Awesome. On that topic, I've got one of your T-shirts from when I visited your guys' office back in November, and it says on the front, "Banks are not your friends," and on the back it says, "Celsius Network is not a bank." Was that a big reason behind your decision to start Celsius?
Yes, I think I wore it at CES, and it's funny because people had very visceral reactions, obviously, a lot of people hate banks, but they don't know why. Like when you explain to people why the banks are not your friends, then they understand it. So let's go through it quickly, because I think it's important for your listeners to understand. So, we think of banks as a very safe place to park money, right? And all of us basically give our payroll, our paychecks, right, or any savings we have, we put it in the bank, and we use the checkbook and so on for our daily transactions. So what really happens is that when you make when you make your deposit into the bank, and at best they pay you 1.5%, right, and so it's almost nothing, right, per year. And then they turn around and they lend me your money. It's not their money. It's not like they printed this money somewhere. They lend me your money. So all they do is they're introducing me to you, and they charge me 25% on my credit card, right? So they make 24% out of 25%. That's 95% of the value. And most people don't understand that. When you put that in those terms, they say, wait a second, if my real estate broker collected 95% of my house, so if my insurance broker collected 95% of my insurance policy, I would be pissed as hell. So you know, like in the movie Network, I am mad as hell and I'm not going to take this anymore. And all we did in Celsius is really created an alternate universe in which 80% goes back to the community instead of 90% goes to the bank. And you have to ask yourself, when you see these banks, when you see these monolithic, gigantic buildings, and you see the bonuses that these people pay themselves, ask yourself where that money comes from, right? How can they afford the best real estate in the world and the biggest bonuses in the world if they're really doing anything for you? So the bottom line is banks are not your friends. Nothing they do is in your best interest. Their job, and they do an excellent job at it, is to maximize the profit and the returns. But the returns are not for the depositors. The returns are for the shareholders, right? It's for the people who are the guys that own the stock in the bank. If you think about what we do, we distribute everything to the depositors, not to the shareholders. So
Gotcha.
I'm the biggest shareholder in Celsius, and I can tell you that it is in my best interest because I'm also a token holder in Celsius, and as a big depositor in Celsius, I benefit much more holding my coins in Celsius than trying to squeeze as much out of the community and giving everything to myself.
Great.
Alex, you're talking a little bit about the banks there. Obviously, one of the reasons people use banks is for security and security of the money that they give to those banks. And with the crypto space, it's obviously a big concern. Can you talk a little bit about how you guys address security issues and what factors you consider, how you store the coin, and how you manage the wallets?
Sure. So security is obviously a huge issue, and there's two facets of security. One is just can other people steal the coins, and the second piece is how risky is it giving it to this or that institution. So let me start with the second one first, because I think that is more important than the actual physical security of the delivery and so on. So when you deposit money in the bank, you say to yourself, well, you know, it's FDIC insured, you know, nothing could happen. Look how much assets they have. But almost all US banks are leveraged at least 10 to 1. And most European banks are leveraged between 30 and 50 to 1. Deutsche Bank, for example, has 52 to 1 leverage as an example, right? So for every dollar you deposit with them, they create $52 worth of liabilities. So if you think that that's safe, then, you know, I have a bridge to sell you also, you know. So the structure in Celsius is that there's always more deposits than IOUs going out, because the only thing when you put your money in the bank, all you're getting is an IOU, you know, and a 1% per year interest, right? So it's not really that safe, and we saw that in 2008. In 2008, the Federal Reserve had to push $23 trillion worth of liquidity into the markets to keep all the banks afloat, because basically that's the amount of money that's required to reflate the economy. And all of us, right? All of us bailed out the banks. It wasn't the Fed that bailed out the bank or the FDIC, but rather all of us through lower interest rates and higher taxes, right? And higher IOUs, which is, you know, what our children owe in terms of debt, which is now about $22 trillion. So I don't I think in absolute terms, if you're holding coins, it's because you don't believe that our financial system is as stable as other people think so, and you want your asset in an uncorrelated financial system. So I'm a big believer that you should have 10, 20% of your assets in this asset class, because if something happens to the dollar or the euro, there's no other, all the other assets are correlated. Real estate, bonds, stocks, all of that is going to depreciate substantially if there is a massive event of a depression or a major recession. So that's the second part of the question. The first part of the question is pretty simple. We use the same infrastructure that the Chicago Mercantile Exchange or Kraken use. it's a company called BitGo that is the underlying custodian for all of these assets. They've been around for almost a decade. They've never got hacked, and they have insurance. So when you download our app and you see an address in the app that says deposit your Bitcoin here, it goes directly into BitGo. It's not, we don't touch it. It doesn't go through any of our servers or anything like that. And the only time it leaves BitGo is when a hedge fund or an exchange or a borrower has first deposited coins with us as collateral. So we have that in BitGo, and then we send them a fraction of your coins, because the way it works is that we collect all of the BTC into one giant pool in BitGo, and from there we issue loans as needed. So you get a pro rata distribution based on the interest that is paid for dollar loans and for coin loans.
Okay, it's great. Thank you for that. And so what, you know, for the people listening, there's obviously some competitors around in the space of lending based on crypto. Some are more successful than others. Some were not even legitimate. I guess, what would you say for people looking at Celsius and, you know, trying to see how successful you are? What are the key indicators for you guys, Celsius, to actually be successful? What are you trying to achieve? Is it users? Is it BTC under management? And then
that's a good question. So let's separate it. Again, there's two parts to this. We have no competition, at least I don't know of any. There isn't a single application where you can just deposit coins and earn interest, not do anything, just anything, a website or an app or anything where you can just deposit them and forget about them. MakerDAO and all the other services out there require you to do tremendous amount of work of constantly logging in and bidding and asking and this and that. And at best, the highest one I've seen pays 2 or 2.5%. And so the way our system works is, again, it's 80% of the distribution. For example, right now, Bitcoin earns 5.1%. We publish the rate every week. It's right in the app. It's on our website. And it's the same earning rate for everybody. It doesn't matter if you came with $10 million or 10 Satoshis, you earning pro rata from the entire pool. So I don't think there is any competition on the deposit side. And if any of your viewers or you guys think there is, great. I would love to learn who it is and see if they are doing a better job than us. The reason there isn't any competition, because no one is crazy enough to give 80% of their profits to the community. They're keeping 100% of that to themselves. So on the other side of it, there's dollar loans, right? So as I mentioned before, I have no problem talking about any of our competitors, because we beat them on rates, we beat them on terms, we beat them on every category, because, again, we're doing it for the community, not for profit maximization. So just if you look at BlockFi, Nexo, Salt, all of them, their borrowing rates are 15 to 25%. So you have to give them $2 worth of Bitcoin. They'll give you at best $1 worth of loans, and they'll charge you 15 to 25% per year. And some of them claim that you can pay with their token. For example, like Nexo, they claim that they'll give you a 50% discount if you pay with their token. But the problem is that they sell you the token at 4 times the price that it's selling on exchanges. So really, there's no, like, when you look at what you're actually paying for, and there's no real value there. So we're fully transparent. We basically saying we have 3 tiers. You can pay as low as 5% interest, and that is when your LTV is low. When your LTV is low, that is less risky for the community. There's less risk. There's going to be an event where you, for example, a margin call will not provide additional coins or whatever. And so when you take 20% LTV, maybe 25% LTV, I forgot, meaning a quarter of the value of the Bitcoin, we only charge you 5%. And if you want to go all the way to 50%, we'll charge you 9%. Again, all that is on our website, and it's in the app. And when you deposit coins, if you're not taking a loan, you're earning interest. And the minute you're taking a loan, you are paying interest, right? So you're on both sides of that transaction. You're either receiving distribution from that, or you are paying into the community. And as I mentioned before, the most important piece here is that when you're paying that interest, who does it go to? Does it go to the shareholders, or does it go to the rest of the community? In our case, 80% goes back to the rest of the community. All of our competitors, without exception, I'll point out BlockFi, right? BlockFi took $50 million from Mike Novogratz. They pay him 15% per year. So they have to charge you more than 15%, and then all of that goes to Mike Novogratz, right? In dollars, not in coins. So they don't do anything for the community. There's no value created for the crypto community.
Yeah, that's great. I mean, and it's good that things are going for the community. In terms of what you do,
and so just one more thing. Again, we published our numbers. We did $782 million in 6 months. I'm looking forward to any of those other guys publishing their numbers. I think BlockFi did $5 million or so, 5.5, something like that, for all of last year. And Nexo did something like 40 million, and Sol did something like 50 million. So just putting in perspective. And by the way, most of these guys liquidated almost half of all their loans because of the decrease in price. I can tell you right now, we did not have a single liquidation for our community because most of the people we had put more coins in, and the people that didn't put more coins in took such low LTVs that they didn't even get a margin call. So not a single liquidation. I should put that in our newsletter because I know a lot of people are interested in knowing that.
It's great, and it goes back to the security to invest in the company. The one question, because you're using a lot of these, I think a lot of your borrowers are potentially people going short on exchanges or platforms, however we want to call them. How much of your, if you can say, loan amount is to hedge funds and institutional money going short? And do you see switching a little bit to the market, do you see a catalyst that would stop as much short selling and then hence reduce the kind of borrowing volume? So,
there's two sides to this question too, right? So there's a good news and there's bad news, right? The good news is that we see a substantial decrease in short demand. And I can tell you that first, so about 80% of our volume is in lending coins, and 20% is in lending dollars. So most of our volume is earning income for the community from lending out coins. And lending out coins breaks into many different categories. I can tell you, for example, December was our most successful month, and a lot of it had to do with tax planning versus actual shorts, because a lot of hedge funds and a lot of other individuals basically wanted to lock in either their profits or lock in distribution. So they had to borrow coins to sell them to lock in the price, or they wanted to borrow and they didn't want to sell the actual underlying coins, and they wanted to borrow coins to basically transact with them, right? So if they were investing in ICO, or they were doing any kind of a movement between one coin and another, if you use your BTC with that is a taxable transaction. But if you borrow BTC from us and then you use BTC to go to XRP, for example, and you come back, that is, you just pay for the capital gains on that transaction. You don't pay on your native coins. So especially for your miners, if they want exposure to XRP, the best transaction is to deposit coins with us, earn interest, borrow against that, right? Because then there's no tax on their own coins, but the coins they borrow, they can go and convert them into Neo or Ripple, or into whatever they want to go long or short. So we have a lot of those kind of transactions, which are not necessarily just bad guys piling on Ripple or piling on Bitcoin and driving it down. And the main problem, look, we are not creating additional shorts. I can tell you that all we're doing is substituting the volume that already exists on exchanges and places like BitMEX and the CME for real coins, because we're making it easy to do it with real coins. And by doing so, we're moving the profits that the CME makes and the market makers make and the exchanges make to the coin holders, right? That's all we're doing. we do not create any new volume. The problem you really have, and that's the second part of the question, is that really most people think there's 21 million Bitcoins. But the reality is that there's over 200 million. And how do I get to 200 million? All the coins traded on the CBOE, on the CME, and on BitMEX are all synthetic coins, meaning they don't really exist. When two guys do a trade for 10,000 Bitcoins on the CME, none of those coins really exist. This is just an IOU between two people. But the effect is that these are new coins being added because there's basically a short position created in this case. If they're selling, they're buying a put against the coin, and then a lot of real selling is happening in the real market because the market maker has to hedge his position, and he's hedging against it in the real market, not with synthetic coins. So again, this is a lot of technical verbiage, but I can tell you that the real problem, the dog that is wagging, the tail that is wagging the dog here are the big exchanges who are creating synthetic shorts that are more than the entire market.
That's a great point. Touching on the market for a second, Alex, obviously top of everybody's mind right now is, the bear market that we've been in. We saw Bitcoin lose 73% of its value in 2018 alone. And, 2019 looks like it's off to a pretty rocky start with the huge drop that we saw a couple of days ago. So I have to ask, what's your market outlook for 2019?
So, look, I can tell you that the fundamentals are better than ever. In 190 something days since we launched, we only had 4 days in which withdrawals were greater than deposits. So if you look at the hodling community, I'm actually shocked. I can tell you that we were planning when Bitcoin was at 6,800 or whatever and it started dropping like a rock. I went to my team and I said, expect 50% withdrawals, like expect half of our AUM assets under management to disappear. And we were shocked. We were shocked to see that the community kept depositing coins instead of withdrawing coins. So all of the activity you see is not with the hodlers. All the activity you see is everything I talked about before, synthetic trading, just trying to squeeze the Bitcoin to zero, trying to scare the herd and pick at it. I don't see selling at all. I mean, I don't see anyone withdrawing coins to sell. And I can tell you, if you look at the Bloomberg article that came out in December, or this was like 2 weeks ago, something where they basically stated that the number of active Bitcoin wallet doubled from 16 million to over 30 million.
I saw that.
I mean, and few other articles like that. And, if you go to DevCon and you see that you could not get a ticket to DevCon, right? There were over 3,000 developers, and the community was just extremely excited, extremely motivated. So I attended the Joe Lubin event in San Francisco, where he helps all these young entrepreneurs who are trying to build stuff on Ethereum. This is a consensus event, and I can tell you that everyone there was a top engineer in Google, in Amazon, in Microsoft, in Salesforce. So when you see the best talent leaving the best companies in the Valley to work on the blockchain, we don't have much to worry about. So is it going to go lower? It may go lower, but I can tell you that this is going to be the mother of all shorts squeezes, right? All these geniuses that think that they can press against Bitcoin with their synthetic coins, eventually all of that has to net out, right? So all of that will disappear. And when they have to buy it back, it's going to be extremely painful. So I think I'm buying coins every week. I don't even look at it. I'm using iBillionaire. It's an app that tracks the GBTC, and I have a standing order. They just withdraw money out of my bank account every week and buy $10,000 worth of Bitcoin.
Have you considered
almost a miner?
Alex? Where's the mining? Have you considered mining, Alex? We got to make you a convert.
So I think if we mine, we will be competing with our customers, and we will be in a conflict of interest. We do not pick winners or losers. We, for example, if you look at the coins we have in our wallet, those are the coins that our community asked us to add. And we want to be as neutral as possible. I'm trying to really stay as neutral as possible, so no one can accuse me of doing anything in my best interest. The whole point here is to do everything in the best interest of the community. And frankly, again, look, Bitcoin's 10 years old. I'm shocked that no one has done this before. I created Celsius because I couldn't find any company like this, right? And unless we all huddle together and basically muscle our way through this, right, and create the short squeeze, their plan is to just scare us away, right? The plan is to scare everybody to sell, and if everybody sells, then Bitcoin is worth zero, right? That's the whole point.
So, Alex, sorry, you keep talking about the short squeeze. And I used to be, I think, similar to your background, a commodities trader. And I was in oil, so we just went through a similar move in oil as it came off and then rallied back up quite substantially. The impetus for that was demand finally outpacing supply. So there was a reaction to supply and demand at a fundamental level. Could you maybe, for some of the people on the call, talk about where the demand may come from for Bitcoin or for cryptocurrency on a global scale that might cause that short squeeze, and if there are any factors or signs we might watch out for to make that happen?
Sure. So I mentioned one before, right? I mean, when you see the size of the community double in 2018, even though most coins dropped by 80 or 90%, again, the size of the community doubled. It's up 100% from 16 million to over 30 million, right? Now, I agree the average wallet is less than $1,000. So in absolute terms, this is not a lot of money. But if it continues to double, right, then nothing can stop it. I don't care how many hedge funds are going to put how much money. They cannot, eventually they have to buy it back. You understand? There's no, it's not like they created negative Bitcoin. All they did is they sold something they have to buy back later. So, young people I talk to, and most of the people that when I go to conferences, they're half my age, right? These are people my kids' age, and they don't want to touch dollars. They don't want anything to do with dollars. They can't explain to you the 22 trillion that they really owe to the rest of the world, but they know something is wrong, and they better not be stuck holding dollars. So I think that young people they're very comfortable with Venmo, with PayPal, and when you're showing them how this works, they're like, "Hey, this is exactly the same thing, and it's a virtual currency, and I can, I own it, I control it, and that's exactly what I want to have." So, just some stats, right? In Seoul, in Korea, which has the highest adoption in the world, and 90% of people under the age of 30 use cryptocurrencies. 90%. Okay, so if you're looking at cell phone adoption, again, in Korea was the highest penetration for young people 20 years ago. We're going through the same thing. Like today, everybody has a smartphone, right? So we just need to get there. So right now it's hard going, and a lot of people are questioning themselves and their decisions. But we've seen this before. We've seen Bitcoin lose 80 or 90% of its value before, and the community came together. The reason I'm in this business is when I saw Mt. Gox in 2013, and I saw how quickly the community recovered and how quickly it just brushed it off and moved forward. I realized that this is not going anywhere. This is going to be the future of all money. So, I know mining is hard. It's hard to mine when your costs are higher than the coins you produce. But I think part of this is really looking at this for the long term, finding new and cheaper ways to generate get electricity. I think all that free and cheap electricity in China is gone. Right, they're kicking all those guys out. So I think the average cost for the miner is going up, which will also drive up the prices, because there's less and less mining, meaning more and more, less and less miners are sharing the same number of coins until we're going to halve it into 2020. So all these things are going to drive prices up, and it's just a question of when it's going to happen.
So, Alex, on that topic, if I can put you on the spot, what's your price prediction for Bitcoin by the end of 2019? So,
I think the kind of the natural state of it is somewhere between the $6,500 to $7,500. I think that's what we're going to see it at the end of the year. Right now, it's trading below cost for most miners and below cost for most hodlers. So naturally, I think it will go back there. And again, I think there was a lot of tax selling at the end of the year. People needed the losses to offset other gains. And so we just haven't seen them buy back. And so for us to get to the next move, to get it back to the 12 to 15,000, we need better use cases, right? So we need less coins hitting the market. So we're going to have to wait until 2020 when, we're going to have the distributions. And we're going to need to see all the innovation that we're being promised on the Ethereum and the blockchain platforms as far as speeds and costs. And so Lightning Network and all the other stuff that people are working on has to come to be. And people have to develop real killer app applications, right? I mean, I'm old enough to have lived through the Netscape moment. And when the browser showed up in 95, everybody knew what the future looks like, and everybody started developing on the browser. It's the same thing here. I think we need to kind of create, I think that what we do, the right lending and borrowing, is the killer app. It's obvious, it's simple, it's transparent, and that these kind of things are going to be the things that bring many, many people into this community, right? The ability to earn 5 times what your bank pays you, or the ability to borrow at 5% instead of 25%. So we just need more of that, right? Like right now, we haven't started advertising or marketing. Everything we've done to date is organic. And, so we have about 15,000 members. And, our mission is 100 million new users on the blockchain, right? So we are not even close to getting there.
It's great. Switching gears for a second. Obviously, you know my background. I'm a miner. When I visited your office in New York last year, we had a really good chat about the importance of hedging and risk management. Are you guys planning on bringing any products to market specifically targeting miners?
So we don't plan to issue derivatives. I think there's a lot of companies that are out there who do this for a living. And so if you want to hedge your positions, or if you want to, we want to be the best in the world at those two very simple things, right? Earning interest and taking $1 loan against, or a euro loan against your asset. That is hard enough. As you see, again, all the guys doing it today look more like day loan guys than the guys are trying to help you, right? So all we're trying to do is really create something like a utility for the community, where it's like a cash machine. You can either deposit money into the ATM, or you can withdraw money from the ATM, and your cost is extremely low, right? When the bank asks you, do you want to pay $3 for this transaction? The answer is always yes, right? So it's the same thing here. I mean, we charge nothing, basically. There's no annual fee, there's no ongoing fee, there's no we only take a cut out of the earnings that we produced for you, and we effectively subsidizing the borrowing with the other coins for the people that need a loan. So the community is helping itself, and our job is to create to expand that worldwide. And I just came from a meeting of how to do this in France, and so we're going to be launching this across Europe in a more robust way. And again, helping people all over the planet to get something they can't really get from any bank.
So one, I think, just really quick question to finish off. People often talk about different types of industries and businesses. The crypto market as a whole, do you view it as disrupting an existing process, i.e. disrupting the banking market? Or do you view it as an innovative market to create new solutions and new demand that didn't exist before? What's your take on the market as a whole, and where do you think it's going?
So here you have to separate the blockchain from the cryptocurrencies. And on the blockchain side, you have the public blockchain and you have private blockchains. So there's a lot of great applications on both. And there you will see reinvention of the insurance business and the supply chain business and the, almost every industry, right? To ride or benefit from, to ride or benefit from this new amazing technology. And just to remind your viewers, the blockchain itself is 30 years old. The inventor of the blockchain, Scott Stornetta, is one of our advisors, and he created one of the first operating blockchains in 1991 in Belcourt. So cryptocurrencies are much younger innovation. And even though there was a lot of attempts at e-money, the Bitcoin is really the first successful global distributed attempt. So there, on that side, cryptocurrencies are attacking all asset classes, right? Cryptocurrencies are coming and saying, we are Austrian deflationary focused value creation, which competes against the Keynesian inflationary system of fiat currencies that we've experienced for the last 700 years. So these are fundamental fights over the kind of the essence of the future of the world. Are we going to continue living in an inflationary cycle in which the 1% that know how to generate yield in an inflationary environment gets to keep all the value? Or are you going to make it more equal distribution in which in a deflationary cycle, everybody has access to the same assets in the same way, kind of like similar to what Celsius does, in which everybody benefits from just even if they hold a few Satoshis, their benefit is exactly the same as the guys that hold millions of dollars. So this is, I was born in communism. I grew up in socialism, and I've spent the last 30 years in capitalism in the United States. I tried the three systems. And I can tell you that this is a fourth system. This is not just some crazy experiment. This is a fourth economic system that is here to challenge all the other systems. So,
fantastic.
When our grandchildren are going to look at this, and they're going to look at all of us as pioneers of something that really changed the entire planet, because close to 7 billion people on the planet are not part of our economic miracle. All this wealth and everything we enjoy in the United States is an exception. Most people live on less than $10 a day. So this is this new system of cryptocurrencies is a way to lift 7 billion people into the middle class. And that's really why I'm excited about it. And that's what we're hoping to do. For those of you viewers that don't know my background, I wrote the patents for voice over IP in 1994. Back when it sounded like lunacy that voice will somehow run on the internet, where the entire internet was just running on the phone network. You have to dial through the phone network to access the internet. Today, 3 billion people use it every day. It's free. And what I don't understand is why the other 3.5 billion people don't use it for free. But my point is it's that we're going from VoIP to MOIP, right? Just like voice over IP became this free, global, decentralized application. No one owns it. No one runs it. There isn't a Google or a Facebook you go to get it. There's hundreds and hundreds of companies providing it. The same way MOIP or money over IP is going to become just a service on the internet.
It's a fantastic way to look at it.
Awesome. I think that's a great way to cap off the interview. Alex, are you up for an AMA with the audience? We have some people that have asked questions throughout our chat.
Sure. Yes. And this is one of my best summaries of what we do and kind of like the high level visions. So I see you recording this. I would love to get a copy of it because I think after speaking at CES for 5 days, I think I finally figure out what we actually do. So you get the best summary of everything in like one AMA. So I would love to get a copy of this interview.
We'll get you one. Not a problem. Okay, cool, guys. We're going to start taking some audience questions. If you have questions for Alex, there's a Q&A button on the bottom of your webinar. So you can type your question there and we'll get to it. First question is from Ellie Ruimi. I see you're from Ukraine. Do you see a future for mining in Ukraine?
So the mining comes down to cost of electricity, right? I mean, that's basically it. Everybody has the same equipment. Everybody more or less has the same access to networks. So it comes down to cost of electricity, and there you're competing with Iceland, you're competing with the Columbia River, which are some of the world's lowest cost production areas. And I know that Ukraine has several nuclear facilities that are pretty low cost, but I'm not sure that you can compete against some of these other resources. So, I think there are many opportunities. I mean, there are electric. I used to. Some of the areas that I worked on was electrical grids. So I know that global infrastructure pretty well. And I can tell you that there are producers, for example, in Texas, there are wind producers that actually have to pay money to the grid because they cannot stop their operation, and the cost of electricity goes to negative rates. So co-locating your rigs with these guys and allowing them, they're not going to run 24/7. But you can pop into mining and get off the grid when these rates are negative is a great opportunity. I haven't seen anyone do it, so here's a free tip for some of your guys. So anywhere where you can see liquid markets where there's trading in electricity. So if you're looking at Scandinavia, all of that area, there's free trading. So there are negative rates, for example, in Finland. There's negative rates in Germany, and so on. So all those producers who are running, who cannot stop their operations, like nuclear, wind, and so on, are great opportunities for guys like your members to jump in and put rigs to play as a way to suck in all that electricity.
Okay. Next question. Would you ever consider getting into lending or borrowing collateralized by other assets, such as real estate? Or is it strictly Bitcoin and dollar or euro based business?
Well, so we are a maximalist. We believe that the value of these. I gotta plug my phone because it's dying. Just 1 sec. All of this, and we don't have power. You see? Here we go.
All right.
So, So I'm a maximalist. So I believe that all assets are going to be tokenized and moved to the blockchain, and because the friction there is much lower than it is on stock markets or on bond markets and so on. Those are legacy systems that just have, again, very high concentration of toll collectors. And the guys that issue the bonds, the guys that rate the bonds are effectively monopolies. And you can tokenize things for 90% less than what these guys charge. So all assets are going to move there. So we will be offering loans against other assets when they are tokenized and when they are running on the blockchain. So we're not going to be offering it. We're not going to expand into the old world. We're going to wait for the old world to come to the blockchain.
Awesome. Since you were experienced in raising capital for tech companies, what are some suggestions you can give for raising capital for a mining operation?
So I've raised over $1 billion in my career, right? Mostly for my 7 companies before Celsius. Most of it came from venture capital, private equity. Those guys are huge skeptics of this entire industry. So especially because of the volatility of the coins, it's very hard to convince them that this is a safe bet with IRR that they can easily discount for the next 5 years. So I think you have to resort back to the community of believers. So you have to really prove to people that you're doing the right thing. So I've seen projects like, for example, people who were building wind farms in areas that, like in Morocco, where there's tremendous amount of wind that is basically almost, that's going to allow them to compete against almost any producer. Or, like I said, going and finding, co-locating with producers that have negative rates. And then going to the community, showing a model and convincing them to back your project. I think the idea of an ICO, even though most people think are dead, is not dead. If you have a great project and you're showing people that you have a track record and you're doing it really for the community, people will believe you and people will fund you. So I think, especially now when the number of projects has dropped by 99%, it's actually a good time to go back to the community for funding. So
interesting.
So I'm a contrarian in that space.
Okay. Matt?
One last question. What would you say is the biggest risk of failure for the firm, for Celsius? However minuscule it may be, what would you say is the biggest risk for you guys?
So look, we raised enough money to have a very long run rate. We don't need more capital. We will be cash flow positive in the middle of 2019. So our job is to de-risk Celsius as much as possible. There are catastrophic events that could basically cause us to go out of business. One event is somebody breaking the blockchain itself, right? Which is a catastrophic event for everybody, right? If tomorrow somebody hacked Ethereum or Bitcoin, and none of us can trust each other with the number of coins we have because no one knows of anything. So that is a catastrophic event for Celsius as well. If somebody hacked BitGo, and their insurance cannot cover their losses. Most of our assets are deployed at any time, so we don't have a single point of exposure, but the chances are that our exposure with BitGo is greater than our absolute assets today. But I think a few years from now, even collapse of BitGo or some of the other custodians we use is not going to be a catastrophic event for us. So we are de-risking our model every day by adding assets, by working with more partners, parking these assets in more and more places, and working with more and more blockchains, right? So I think when we started, close to 100% of our deposits were in Bitcoin. Today, I can tell you most of our new deposits are in altcoins, and we really again, I'm cheering and really amazed at how resilient the hodler community is, and I'm shocked. Obviously, it's great success for us, right? But that we chose this specific niche, but even we were surprised at how stubborn and resilient the hodler community is. So you asked me before about, am I worried, or am I shaken up? I don't see any signs that the hardcore guys are folding their hand.
Well, I think everyone will be pleased to hear that, especially coming from you. All right, guys. Well, I think that's all the time that we have for today. Alex, thank you so much for joining us. This was really awesome to spend the time with you and hear you answer the questions and get your thoughts on, the market and Celsius, and have you talk a little bit about mining as well. This was fantastic.
Yeah. So let me finish this with the call to action. And
sure.
Again, the only way we raise prices, it's if you haven't seen my presentations, I use a very simple formula: E equals MC square, right? I didn't invent that one. I can't claim that. But the point of the E stands for not for energy, but for Ethereum. The M stands for membership, and the C square is community credit, right? So if you want your Ether or Bitcoin to be extremely valuable, you need to 10x the membership. So I'm asking every one of your viewers, everyone who's a miner or who's a participant in our community, to go and introduce the Bitcoin or the Ethereum platforms to new users. It's all about new users. It's about converting new people who are not familiar with this or are sitting on the fence. They don't know how to buy a coin, and bringing them into the community. If you don't have an easy way to do that, we have a service in our app called Sell Pay that allows you to send coins, a fraction of a coin or a coin. You can send somebody 10 cents at no cost, without them having a wallet. They don't need anything. So it works like a Venmo. All you need is their cell phone or their email or their WhatsApp, and you can send them their first fraction of a Bitcoin or fraction of an Ether, and that's how you introduce them into it. I use it every day, and we have close to 100% conversion rate. When people get free money, they never refuse it. So you want your coins to be more valuable. Every one of your viewers have to bring 10 people into the crypto.
That's awesome. Cool.